In market-based valuation approaches, what are comparables and what are the types of comparables used? Well, oftentimes when you're using a comparable, you're simply trying to identify the most relevant value metric to value the firm, and that value metric is used in a ratio. So you're basically saying what is the extent to which this value metric is present compared to the total value of the firm. So if you have this quantity of the metric and this is the valuation, you can reduce that down to a ratio, and that ratio can be used to value other firms. So that is the essence of comparables. Now, what are some comparables that are commonly used? Well, the ratios generally are based upon valuation of the company to things like after-tax earnings, cash flow, revenue, and then you may in select industries have metrics that are related to actual operations, like the number of customers holding accounts with the company, the number of daily, weekly, monthly users on a given website, the amount of attrition of recurring subscriptions, things of this nature. These are going to be highly specific to the industry in which you're in. So that's the value metric. How do you determine the valuation of these companies that supply the denominator, the bottom portion of the ratio between the metric and the valuation? Well, generally the source of valuation is either similar transactions, that is a funding transaction, a sale of the venture, an initial public offering, something of that nature that gives a value to the firm. Okay, and it's obviously best if you are comparing transactions of a similar nature. So if you were going through an equity financing round, a Series A round, for example, you would hope to identify other Series A rounds that are valuing a company of a similar nature. 2, general industry multiples. So oftentimes these value metrics are so ubiquitous or common across an industry that industry publications, industry resource experts will put out valuation ratios that in general are reporting on the current market value based upon these metrics. And it's within the industry, so it's going to be somewhat of a relevant firm or company. And then looking at similar companies, even if they're not in your industry and even if they're not going through similar transactions, you may look at a company and see how it's valued in different ways and how that company is similar to companies within your industry and pull some valuation ratio from there. So obviously transactions are probably going to be the most direct, industry next, and then simply companies with similar characteristics that may not be at your transactional stage or level or within your industry. But again, these are great sources for pulling the valuation so you can identify the metric to the value of the company to get the ratio to come up with a valuation based upon these market comparables.